Assalamualaikum to Puan Nur Abida. My friends and I want to present about financial accounting. My name is Nurul Safawani Adawiyah and my matrix number is 1022. My team members is Tay Yan Yin and Rashini. In this slide, we talk about introduction of financial accounting, measurement of element or assumption, qualitative characteristic, and last conclusion. Introduction of financial accounting. Financial accounting is the process of recording, analyzing, and reporting the company's financial statement to external stakeholders such as investors and creditors through standardized financial, which include the balance sheet, income statement, and cash flow statement. 1. Johan and Zizan are joint owners of Jozan Carpet since the year 2017. At the beginning of the business, Johan contributed 16,000 ringgit cash, while Zizan contributed a building worth 115,000 ringgit into the business. They also took a loan from bank amounting 18,000 ringgit. In the event of non-performance loan, the bank could extend its claim to the personal asset of Jozan and Zizan. Any contribution withdrawal by Johan and Zizan are recorded as capital and drawing respectively. The business sells its carpets on cash and credit terms. The business will record the credit sales when the carpets are delivered to the customers and even though payments are not yet received. Additionally, the business will record all transactions in Ringgit Malaysia. During the year 2019, the business bought a delivery van at a price of 17,000 ringgit. The business provides depreciation charge on its non-current asset. As at 31 December 2020, the accumulated depreciation for delivery van and building were 12,000 ringgit and 10,000 ringgit respectively. Nevertheless, the business maintains to record the value of these non-current assets at their purchase value in its financial statement. Johan and Zizan expect the business to survive in the foreseeable future. The question is: A. Discuss any four measurement of the elements of financial statement or assumption applied in the above scenarios. And B. Interpret any four most appropriate qualitative characteristics from the above scenarios. The first one is historical cost. The definition of historical cost is the original purchase price of the asset recorded in the financial statement without adjusting for change in the market value. The suitable scenario for this assumption is the delivery van purchased by the business in 2019 for 17,000 ringgit is recorded as its purchase price. Even though the market value of the van may change, the financial statement still shows 17,000 ringgit. It means the historical principle emphasizes that we must record asset based on the original purchase price, so the information is more objective and verifiable and not based on current market price, which are always changing. The next part is going concern assumption. Going concern assumptions means the business is expected to continue operating for the predictable future. The suitable scenario for this assumption is Johan and Zizan expect the carpet business to survive in the foreseeable future, which is why the depreciation of the delivery van is 12,000 ringgit accumulated is charged yearly instead of expensing the full 17,000 at once. This assumption allows accountants to postpone the recognition of certain expenses like depreciation and spread them over future periods, assuming that the business will continue to exist. Without going concern, all costs are immediately consumed and the account show a big loss in the first year. And with going concern, the costs are allocated by year and financial reporting is more accurate and reflect actual operation.
Third is accrual basis of accounting. The definition for this is accrual basis require transaction to be recorded when they occur, not when cash is received or paid. The scenario below is the business records sales revenue when carpet is delivered to the customer, even though cash payment have not yet been received. It means if a company had sell goods today, they must record the sales even if the customer will pay later. This purpose is to give a more accurate picture of their financial position because it shows all their activities that had truly made in that period of time. The fourth one is business entity assumption. The definition for it is the business is considered a separate entity from its owner. Personal transaction of owner must not be mixed with business transaction. The scenario below says that Johan contributed Rm 60,000 cash and Zizan contributed a building worth Rm 150,000 as capital. These are treated as business asset, not as Johan's or Zizan's personal properties. Similarly, their withdrawals are recorded as drawings. It means that whatever Johan and Zizan had put into the business is no longer considered their own personal property. It belongs to the business completely. So if they want to take out any cash or item, they must make sure to record properly as a withdrawal, which is drawings. Well, as for qualitative characteristic, the first one is faithful representation. The definition for it is financial information must be represent economics reality faithfully, meaning it is complete, neutral, and free from error. The scenario below says that when Johan contributes Rm 60,000 cash and Zizan contributes a building worth Rm 150,000, this must be recorded truthfully in the capital accounts. This ensures the financial position of the business reflect the true ownership's contribution rather than hiding or distorting it. It means that when the cash and building that were contributed by Johan and Zizan must record in the business account truthfully without giving any false information or hiding or changing the facts.
Second quality characteristic is comparability. The definition of comparability is allow users to identify the differences and similarities between financial reports across periods or entities. Based on scenario, the business charges depreciation on its non-current assets such as the delivery van Rm 70k and building Rm 150k by applying the same depreciation method every year. Johan and Zizan can compare results from 2019 and 2020 to assess whether profits are improving or declining. This characteristic is called consistency, which means a business should use the same accounting methods and policies over time by recording sales, expenses, or other items in a consistent way each year. The financial statement become easier to compare. Without consistency, it would be difficult for users to track trends, measure performance, or make meaningful comparisons because the information would keep changing. Therefore, consistency is important to give a clear and reliable picture of the business's financial progress. Qualitative characteristic is neutrality. The definition of neutrality is financial information must be free from bias, not favoring one outcome or party over another. The scenario is even though Johan and Zizan expect their carpet business to survive from the foreseeable future, They cannot prepare financial statement in an overly optimistic way. For example, they must still record annual depreciation of the delivery when RM 70k and the building RM 150k instead of inflating assets value. This prevents bias and ensures the financial information remains neutral. From my understanding, it means financial reports should show the real financial situation of a business, not what the owners wish it looked like. The numbers should not be adjusted to make the business seem better or worse. This way, the information is fair, unbiased, and trustworthy, so that people using it can make the right decision. The fourth qualitative characteristic is verifiability. The definition of verifiability is financial information can be supported with objective evidence so that independent and knowledgeable people can agree with, faithfully represent what it claims to represent. The scenario is the purchase of the delivery van for RM 70k can be verifiably by checking the invoice, bank payment records, and the ownership document. Similarly, Zizan contribution of a building worth RM 150k can be supported with property valuation reports and legal ownership documents. This demonstrates that information recorded in the account is verifiable. In my understanding, verifiable means the number in financial statement can be checked and proven using reliable evidence like invoices, receipts, or contracts. This gives users confidence that the information is accurate and not just give guesses. When figures are supported by real documents, people can trust the financial reports more. The conclusion is Johan and Zizan's business demonstrates the importance of applying proper accounting measurements and assumptions together with qualitative characteristics. By using historical cost, going concern assumption, accrual basis accounting, and the business entity assumption, the business records transaction in a consistent and reliable manner. At the same time, the qualitative characteristics such as faithful representation, comparability, neutrality, and verifiability ensure that the financial information is accurate, unbiased, and useful for decision making. In overall, I would say these practices provide a true and fair view of the business performance and position, helping Johan and Zizan plan for the sustainability of their carpet business.